continue to trade in the red pre-markets. As we see, that's 165. Let's talk more about the markets with Sam Stone, Chief Investment Strategist at CFRA Research. It's Father Sunday, I think, Sam, because we had Setmeyer on, Rich's son, and now we got you on. And everybody remembers your dad, great Bob Stovall. So I don't know whether anyone planned it. I think it's serendipity, serendipitous that it happened. But welcome. It's good to see you.
Well, good. Thanks, Joe. Nice to see you too.
And I said to Setmeyer, his dad taught him everything he knew, but only a little bit of what his dad knew. I think your dad taught you everything you knew, right?
Yeah, and I'm still trying to catch up to his vast amount of knowledge.
So give us some of it. We heard technically that this looks like a normal seasonal correction and not much more, with maybe a low of around 4,200 on the S&P. And I don't care if you want to do bottoms up and talk about what stocks you like or what sectors you like instead of an overall macro view, but where are we?
Well, I agree with you, and I actually believe that while fundamentals will tell you what, technicals...
All right. Good morning, everyone. How is everyone today? I just gotta say, man, yesterday the calls on ES and NASDAQ, whew.
And that's putting pressure on the markets, which will probably last until the early part of October. But if you look also at technicals, by coming down to the 4,200 level, that is a Fibonacci retracement level. It then becomes the support of the March 23 low, and also is close to the 200-day moving average. Even people are talking about the violation of a head and shoulders pattern, which would also bring it down to maybe about the 4,100 level. But I remind investors that more than twice the number of pullbacks, corrections, and bear markets ended in October. Not surprisingly, October has had 35% more volatility than the average for the other 11 months of the year. But I think that because we are heading into the favorable fourth quarter, especially of a pre-election year, that you're probably better off rotating than you are retreating.
Do you think, Sam, in your view, that we see new highs next year in the
Good
averages?
morning,
Yes,
everyone.
Less than the first year of a new bull market, and we have not had a bull market die before its first birthday, and you have to go back to 1948 to find one that did not eclipse its second birthday. So I would feel fairly optimistic. Obviously, it's not a guarantee that this bull
What's up already? Awesome. Look at you, my guy. That's what I'm talking about.
will come into play.
That is what I'm talking about. Get
We
it.
do think that earnings are on the ascent, likely be
Let's
gaining 8.5% in the fourth quarter of this year, 12% next year. And I think that a lot of the headline concerns that we're experiencing right now will be dissipating. And let's face it, with all of these
all right.
concerns,
Let's take
why
a
is the
look
market
at
down 5.5%?
Tesla
And we don't need a recession
to
win
get
the
a
inflation
pull.
battle.
So first thing I want to point out is that yesterday, okay. So last night when the market opened, it did this very small gap down, and we have this also on ES, right? So right here you can see I have a long position on ES. I'm looking to add to it. But there's a small little gap down void that I'm looking for price to fill. We were making our way up there and then just sudden retracement, but I do think we're gonna end up pushing higher to recap and fill this gap on ES, even Dow Jones. Dow Jones not so much, but on NQ, yes. So I'm looking for dip buys on ES. I'm looking to add to my ES long position, and I'm looking to get long on NASDAQ. Already, you see, I messed up yesterday, oversized and not patient.
In fact, let's take a look. You could see that the
Nice.
futures are the worst
With
levels
a
since we
nice
started
green
the
morning.
show. So right
Awesome.
now,
Not
Dow
sure
futures
whether
off by
to
175,
trade.
the S&P futures down by
Nah, I mean, if you're up 700 on the day, 750 on the day, just if you do trade, start off with the micros. Start off with the micros. ES is like SPX. Yes, ES, SPX, SPY are one in the same. Okay, SPY and SPX, those are the equities version of the S&P 500. Okay, SPY, S&P 500. SPX is still the equity version. Then ES, what you see right here, look at E-mini S&P 500 index futures. Okay, they're all one and the same. They're just in different fields of the financial market.
Economic risks. Moody's warning that a government shutdown would be negative for its U.S. rating. No surprise there. And history in the making. President Biden would be set or would become the first
Video
sitting
with a
president
gap down, gap fill, pull back.
planning to join strike
Yeah, today's gonna be an interesting day. So the market's already down. Dow Jones is already down 190 on the day. NQ is already down 92 points. ES is already down 26 points. So let's see what type of retracements we get at the 9:30 open, and then look to, I'm going to be looking to add to my position. Right now I'm only down maybe slightly under 10 points, so a little over 600 bucks. I'm down on ES. I'm literally just going to be risking yesterday's profits, being that we ran from, from 51. I caught it from 43.51 all the way to 43.80, so nice 30 points.
is considered to be really pretty terrific. It's not bad. No, it's not bad. 4 or 5 versus 2006.
Good morning, good morning. All right,
16, 17 years. That's just a
looking
great rate.
for
So I think that that's really what we're up against with stocks. I can talk about like what Mike Burr said yesterday, CEO of Chevron, and where oil's going. Talk about what Jamie Dimon's saying, get ready for 6. But what I'm saying is they haven't been able to slow the economy. And they're selling a lot of bonds. Fed's dumping its bonds. And I'm not saying we're dinosaurs, because we've had tremendous periods where stocks have gone up and they're 6, 7% on the 20-year. But David, let's face it, we can sit here all day and talk about, what, I really like the 20-year here. I'm taking it to a buy. And no one would disagree with us.
No, well, listen, I mean, the 10-year has come into, a lot of conversation. Notice you and I were out yesterday when we reached that 4.5% level, but it certainly did seem to get a lot of people's attention. Don't know why 4.49 somehow doesn't, but 4.5 or anything does. But
What's double?
your point is twofold, though, Jim, isn't it? One is the impact.
Good morning, Queen. Good morning.
It's a real choice or opportunity for investors who might prefer not to invest in equities.
Exactly. I mean, I think we've had tepid perception for equities for a while now. And we did have that vicious decision by the Fed to surprise people in October of last year. But Carl,
Well, you go, girl. Get it.
have this terrible situation where
That's what's up. I love it, man. I'm really enjoying seeing that a lot of you guys are just and ladies, a lot of you gentlemen and ladies are passing and getting funded. Like, let's get it.
rates could stop going higher. And that would be, obviously one of the greatest things in the world.
But it,
I just don't see the big layoffs. I don't see the Fed winning yet. I don't know whether one rate hike.
so what's your input on SPY?
And when you speak to people, they don't want to say, geez,
I'm gonna flip it on you, bro, real quick, and you tell me what's your input on SPY. Let's flip this, right? So let's look at SPY. Right, so SPY is definitely holding so far above yesterday's low. So what is your input on SPY? Where would you like to buy?
So you have a lot of people who just say, I'll just sell all these the mega caps. And government's after them anyway, right? And I'll sell them. I got a good gain this year. I'll buy this piece of paper, and if it goes down in yield, maybe I sell it. I don't have the emphasis to buy them. It's all momentum. But I have to tell you, I'm exhausted.
It does. I would just say if you were in the Ontario area, not so much because of the regulations that they're doing. But if you're outside of if you are outside of Ontario, yes, you can.
More likely than not, but again, I think people should be prepared for higher oil and gas prices, higher rates, as a matter of just being prepared.
Yeah, a pullback down to to two excuse me to 428 to 428.70s. A pullback down to here would be good. Would be a good buy. It could there is the possibility that it could break 428. Look at the daily.
Of the year, he was talking about 6. I think it's perfectly realistic he could get to 7. Do I agree with him? He's
I'm seeing some support at 426.05. So I mean this is the daily. Goes up here. Gonna gap down. Yeah, I would say anywhere between 425 and 428. I mean that's 3 points. You would have to scale in. But I would set an alert if price was to get below 426.50 for a potential buy or at that level.
complete failure of the sanctions on the Russians because they're selling oil to the Chinese. I came back. I tried to find one positive article today. One positive. I mean, besides about the Eagles winning, that's the only thing I turned to. I honestly turned to the Inquirer because that's it. I can't find anything positive.
All right, there you go.
Many people who want stocks to go higher, I feel beleaguered. And the only thing I have going for it is that everybody feels beleaguered. But that's, the contrary sentiment. Someone emailed me today from the club. Said, Jim, are you aware of all the stocks you have that are double tops? And I'm like,
Yeah, this pullback could be just a slight retracement. I mean, the low for the day has already pretty I think might have been put in at the London Open, which was 3 a.m. We look at ES. I mean, there is still a possibility we could come here to retest this low and then turn around. So we'll see.
Today it's Katie Huberty saying we're more optimistic about the disinflation trend than the Fed, that the Fed is overemphasizing growth over the inflation data. And so they think markets are poised for maybe 50 basis point correction here.
Look, I'm a believer that everything is so negative that you got to find things to buy. And that's what I've been telling the club. But I'm not aggressive. I mean, it's not even that much oversold yet. But we're setting up October. Let's get this. I was watching Wex this morning, watching Frank. October, you start off with October's always good when you come out of this bad September. So, here it is, the 26th of September. So, when you bolt now, knowing that October's always been good after, I'm not bolting, but I'm not John Bolton either. But David, when I look at for instance, what's happening in Detroit, I mean, we have a president. Not only is he, remember he proclaimed he's the union president. Well, I mean, he's going to be
He's backing it up. He's actually going to be on the big.
Yeah, but what does that say for the people who don't want 32-hour work week and don't want a 40% increase in wages? I mean,
Well, who doesn't want that?
well,
I want that. Will you give that to me, please?
Mike Trust owns shares in Ford. And I refuse to be beaten out of Ford the way I was beaten out of Boeing, but so far I'm looking better. You can't get me to sell Ford.
I can't get you to sell
No,
Ford.
no, I'm not, no.
There's nothing I could say.
Well, you could
They're
make it a
never going to
Jeopardy
be able to
question.
generate a real margin.
No, I just think
That
that
they are. I mean, that Tesla's just going to dominate everything and everybody.
See the piece today about the missteps in China.
Yeah.
4 times earnings. 4 times earnings. I have stocks. No, let me.
Do you say that to yourself in your sleep? For that 3 hours that you briefly get that you call sleep?
Actually,
4 times earnings.
No,
4 times earnings.
last night I took 5 classes and I did not go to biology once, and the final exam was coming. That's what my dream
That
was.
was worth that one of those dreams.
Yeah, and I didn't go to biology, and I was about to flunk the class. So as far as I'm concerned, that's the equivalent of Macy's at 3 times earnings. Like I didn't take biology. I'm going to ruin my transcript.
These things get to a level of earnings that is simply not in any way indicative of the future performance
Thank you.
of the stock price.
Thank you.
No, I'm not saying that's good. I'm saying they never get out of that.
Well, no, oh, you mean it's like a valuation trend or something?
Yes.
Where are you negative? I'm saying Macy's down 50% at 3.5 times earnings. You should consider it. I mean, when people are shoplifting, topping
What's
up
going
their
to be the
shirts.
catalyst against Macy's going up? It's just going to have to be earnings, right? It's just going to have to be an increase in sales in some way that's somewhat unexpected. By the way, have you seen luxuries not doing well at all?
No,
Looking at a recent
the
note
Merrill
here.
Lynch EU luxury basket's back to flat. It was up 30 earlier in the year.
Valentino's chairman said they're seeing strong signs that growth this year will be much worse than the 10% they'd originally
We have a big
expected.
COVID hangover. People are not spent. We've got the 44 million people starting next week who have to start paying student loans. Well, okay, how about this? I got an idea. Why don't we just stop and come in every morning and I'll say, David, I like
Thanks for.
And then you leave.
we do right here. We do a stop trade. David,
You're not in the shot.
You're welcome, buddy. I gotta ask these questions, man. Gotta make sure that, you know what I mean, you're doing some analysis yourself and, putting it out there. Like, once you, like, I'll say this, like, don't be afraid to share any trade analysis that you guys might be looking at or trade ideas, right? Because no one is ever going to be 100% right. And when you put stuff out there as far as like your trade plan or what you're looking to do, then there's a sense of accountability, because you have to either follow through, or at least it's like, okay, what's your view on this particular matter, or what's your view on this particular chart? Like, what do you see happening here, and what are the potential probabilities, right? Is it going to continue lower? Is it going to continue up? If it was to pull back, where would you look to enter and why? Right? So these are always questions that I ask myself, not out loud, but it's like, okay, I want to enter here. I look at the downside. Like, I always look at what's my potential downside from an entry before I'm even looking at, okay, what can I potentially make? And then once I understand the downside, I'm like, okay, what can I potentially make if it goes here? Okay, now I can adjust my position size accordingly.
with a new EV battery plant that the company plans to open just west of Detroit in Marshall, Michigan. Why is this important? We'll explain in a bit. This EV battery plant is scheduled to open in 2026 with about 2,500 employees. Ford is investing $3.5 billion in this plant. This is going to be a key part of it, developing the infrastructure for electric vehicles. Well, yesterday Ford said it's pausing construction of that battery plant, and they didn't go into a lot of details, but said they are assessing the ability to competitively operate the battery plant. The word competitively there should catch your attention, because just a few minutes after Ford issued that statement, the UAW blasted Ford, saying, "We are simply asking for a just transition to electric vehicles." And Ford is instead doubling down on their race to the bottom. Clearly, this has become a thorn in the discussions between the UAW and Ford in terms of, will these workers be represented by the UAW? Where is the plan here? Keep in mind, a number of these EV battery plants are joint ventures between a big three automaker and, let's say, a Korean battery firm or a Japanese battery firm. And they're not under the master agreement of that particular automaker. Now, we don't know all the details that are involved here, but that statement from the UAW just minutes after Ford's, clearly this is one of the issues that's in focus here today. One last thing, as you take a look at what we might be seeing today, keep in mind as you look at GM and Stellantis, you are looking at just 12% of the UAW members here in the U.S. who are on strike right now. Certainly a big deal. We're not trying to downplay that, but keep in mind it's just 12% of their membership that are on strike right now. So the UAW could make
15 minutes to
a much
go.
bigger strike in the days to come, weeks to come. They could sit there and say, we want to strike this particular plant, or we're going to take down a couple of plants. That remains to be seen. So again, we are waiting for the president to come here.
So it looks
to the
like gold
Detroit
has
area.
a strong
There's a poll
support
camera
at
with it. We know there'll be
1900.
pictures of
Let's
him
take a
shaking
look.
hands with UAW members, giving his
I mean,
speech
it's
that
still
we've heard many times
25
about how he
points
stands with
away.
organized labor. But beyond that, guys, we don't have a whole lot else.
When we left on Friday,
There's a nice,
we seem to think
it
that
could form a
Ford
nice
had
double
developed a
bottom
better
at
relationship with
1922.
We come in today, this
Go
feels
to
like a
the
96
daily.
mile per hour fastball thrown at the Union.
Ah,
Union,
we're
however,
also
like
approaching a
Friday,
200
Tuesday,
EMA on the daily time frame, and again that's lining up at 1922, so we could see a really nice bounce at this level.
Everybody was saying, hey, things are they're progressing between Ford and the UAW. And they came out and they absolutely blasted Ford along with the other automakers. And then they said, you know what? We're going to have strikes, Michigan Assembly Plant, and then the two other plants for GM and Stellantis. And then we heard last week, hey, active, very active talks. We heard this from people familiar with the discussions. Very active talks between the UAW and Ford. Now, very active doesn't mean it's positive, but Ford then came out and said, we've made some progress here. Still significant gaps. And then this came out. So I think this is the nature of these discussions, Jim, that it's going to be, it's hard to predict what it's going to take to get this over the finish line.
Hey, Phil, really quick. Street's trying to gauge the impact of the strike on inflation by looking at inventories and then the impact on used car prices, for example. Are we going in
Yeah, so remember, the numbers I'm giving you are the numbers that are the actual gold futures. If you're trading gold on a Forex broker, the numbers are going to be different. So right now on Forex, right, the current numbers of gold is 1906.40, right? 1906.40 is the current price numerical value of gold on the Forex side. But as you can see, this is the actual gold futures, okay? Now, the reason there's a difference between this price and the Forex side is because this expires and then it ends up having like it expires and then there's a contract rollover, which a lot of times the contract might be of a different value. So example here, right? So look at, you see how all these different contracts. So the contract that best lines up with the Forex side is this one, 1907, which expires in 2 days. That's GCV23. So because there's that difference, that's why you end up seeing a different numerical value, right? Because Forex is continuous. There's no contract rollover when it comes to Forex. There's you do have those gap ups, but there's no contract rollover. So you see how from here it jumped to this one, which had the longest day and again the most volume. Even this GCX23, it is active, but again it's very, very low volume, only 134. Not worth trading in my opinion. So that's the difference when it comes down to futures and Forex. Futures, you have contract rollovers, which sometimes is a major numerical value from the current contract that's trading and the next one that's going to come into play, or the one that's expiring and the one that's coming into play. Whereas Forex is continuous. All right. So when you trade the indices, which is NASDAQ, right? So when you trade NDX, which is the Forex representation of the NASDAQ, that is continuous. It doesn't have the contract rollovers that gives those massive gaps and gap downs. Okay, 11 minutes to go. Market still dropping. Load. I'm going to try and trade options on SPX, so I need to reach. No, absolutely. You wanna wait. So I would say you wanna watch it on a 5-minute or 15-minute time frame, and essentially what you wanna see is something like this. Let me pull that up. Okay.
Next thing to pay attention to on AI is not search.
Yeah, on the Forex side, there was a gap down. Give me a second. I'm gonna post a chart.
of travel, being able to say, I want to go to Istanbul, it knows enough about you, enough about all of your preferences, that it can basically ask you one or two questions and then actually go and execute the transaction. Right now, it's research. When it turns to action, everything changes.
That's Barry Diller on Squawk today with his take on what's next for AI. Meantime, Spotify's chief Daniel Ek tells the BBC the company.
So what we want to see is maybe this.
And then there's OpenAI, says ChatGPT can now see, hear, and speak. The update to the chatbot allows it to understand spoken words, respond with a synthetic voice and images. Diller's point is whether or not this is all fair use.
Yeah.
Somebody's got to get paid in his view.
Right. Well, as we know, it was a key point in the writer's strike, and something they believe they have successfully negotiated an answer to. By the way, the leadership votes today. It's a little bit of a process here, but we do expect that it will be fully ratified, that deal that they did finally.
Okay, so I'm posting a chart real quick so you can see. So ideally on a 5-minute time frame, this is what I would like to see on SPX. So you see the orange circle, that retest is where I would like to add, right? Because right now it's just dropping. So we need to see a higher low form, right? Or we need to see a nice run up that will break above. Hold on, I'll show you the. Oh.
Your Wintel computer will do this. The chips will ship, and you'll be able to book your restaurant.
Just by talking, just by saying, this is what I'm going up.
Or we want to see.
You'll get a PC that can do it.
You've been saying Q1 will be the beginning.
That's when they're going to be marketing them, and in Q2 you'll get them. Q3 they'll be prevalent. It's a whole new cycle. That's why one of the reasons why Micron keeps getting recommended. But no, it's here, and I think people don't understand. It's here, and you'll be speaking your PC, and it knows a lot about you. And exactly what Barry said.
The other option I'm looking for is this. Right, so before, because we don't want to try to catch a falling knife, all right? We want a nice solid confirmation. Now, if you want, you can mark off the low of the day, right? So by marking off the low of the day, so right here, here's the low of the day, okay? So at 43, let's say 43, 44 even, right? So what we're going to do is we're going to create an alert. If price gets at or below that, we'll get a notification. But so far, it seems to be holding this level. Now, if we can firmly break above 43.65, any pullback between 43.60, we should see a nice movement up. I do think that we're gonna end up filling this gap. They just might play some games with us at first, but I'm watching. Anything that essentially holds over yesterday's low, I'm willing to add. But let's see if we get that. So those are the two potential scenarios that I'm looking for on SPX, which is SPY, which is ES. Mm-hmm. Looking for the buy on NQ. Yes, sir. Yes, sir. So let's see. Have I haven't even opened up the Forex side yet? Right. Four minutes till the open. Jeez Louise, gold. Gold said I got nothing for you. All right, let's see if we get a nice. Let me see how my peeps on YouTube looking. What's up? What's up? I think NY session might sweep London's low, then push up, possibly. Different contracts. So your gold, if you're trading the actual futures, all right. I just went over it real quick where the current contracts that my gold is on is GCZ23. So I've been trading GCZ23. If your gold is 1906, that means you are trading GCV23, which expires in 2 days. Literally within 5 to 8 days of a contract expiring, TD Ameritrade will automatically shift it to the most recent one, or to the one that has the longest expiration or more volume. On Tradeovate, I have to change it manually, which is annoying, but that's why. And if you're trading on the Forex side, that's another reason why, because Forex is continuous. Futures, you actually have an expiration date and rollovers, which causes a major difference in price. Why traders prefer to trade futures gold than Forex gold? It's all a preference. I mean, it's the same instrument, right? So the actual futures, you have less spread from the Forex brokerages. Forex brokerages, sometimes you have a wide spread, sometimes you have a massive slippage. You don't have that on the actual future side. And whatever you're trading, remember, whatever you're trading on the Forex side, you are trading a CFD version of the actual future. And the actual futures and commodities is housed at the CME in Chicago. Okay, so you're basically, think of it like this: anyone that's trading the actual futures of gold and Dow Jones and S&P and Nasdaq are trading the original. Anyone that's trading them on the Forex side, you're trading a clone. That's one of the easiest ways I can explain that, right? We're trading, anyone that's trading the actual futures, you're trading the original Dandara. Anyone trading the Forex version of it, you're trading a clone version of it. All right, here we go. 10 seconds. 10 seconds. Let's see what we about to do. Okay. Setting a buy limit on ES at 43.48 even. Come on.
Order filled.
Order filled. Let's go. Come on.
Order filled.
Let's go. Just took a long on NASDAQ at 14,836. Come on. Yeah, baby. LOL, you're not a clone, but you are trading the clone one of it. Ooh. Oh. Oh, oh. I don't like that.
There's a big moat. I think people
Ooh, gold has no legs.
it's like the
Sheesh. Oh, down she goes.
It's intuitive. It's an intuitive sight. David, that does matter because people want to be in the one that's easiest to figure out.
Right. Whatever's the quickest, easiest way
To lose money.
Between that and Domino's top pick
About to stop out of NQ.
Very interesting. The dominoes is that they think the estimate cuts are finally upon us. I like that call because one of the reasons why they've been down is they didn't have the DoorDash and Uber. Now they have that. But then the other side of the trade is it's up so much, so you're not early. Wingstop, I had them on last week.
Still in the runner. Okay, Jaffe, you just printing today, buddy, huh?
Wingstop does well because of franchises. And in terms of the franchises that are a bargain to buy, they plus 400,000 and you average about 1.7 million average unit volume, and they can get to 2 million. So
Get it.
For our viewers who want to own something,
Okay, I'm still alive in NASDAQ. My stop loss is 14,800 even.
something like kind of like plastic.
reminds me really quickly of McDonald's, lowest since March, and you're starting to see McDonald's as a proxy for economic activity.
McDonald's, there's a fight between the franchises. They're not thinking you're getting enough, and the franchisees are what matter. You know, a great CEO has to do two things at McDonald's. They have to like sell a lot of product. They also have to please the franchisees. And apparently, according to Restaurant Magazine, the franchisees are incredibly unhappy. So, Wingstop's the opposite. Wingstop, by the way, it's almost impossible to get a franchise because you have to demonstrate.
Where's the reversal? So far so good. This is a higher low. This is a higher low. Come on.
originally diabetes drugs start to become even more ubiquitous. Does that hurt fast foods?
Well, I mean,
There are those people who believe that could be the case.
I think that people.
By the way,
What's up? What's up, Top Gun?
are in this market, of course, up 51% this year.
Got to.
$25 billion market value.
I asked all the execs who are in the so-called junk food category whether they're
All right, let's
they always
go.
say the same
Huh?
thing, which is that there's a lot of people who just like
Let's
junk food.
go. Let's go. Yes, baby. Yes, yes. Do your thing.
I mean, alcohol's had this right now.
ES can get back over 43.60. We are chilling.
It's true, but then if you can eat
Okay.
recommended today, and
Oh, this 15-minute candle's looking really good on NQ as well.
chess cabinet for UCW.
Come on, baby.
Upgrade this
I'm taking a long. I'm taking a one contract long on Dow Jones. Dow Jones seems to be having way more strength in comparison to Nasdaq and ES. Yep, there goes Dow. Let's go.
You're saying that a combination of that and ChatGPT has basically made it so nothing happens.
Damn. Who's your broker?
Do it, we don't even eat. The only thing that doesn't.
We won't be fat.
Do you know the only thing that tastes good but doesn't?
E-Trade. Ugh. Damn. It's horrible. That's one thing I hate, man. Okay, come on, ES. Come on, baby. Do your thing, baby girl. Come on, come on. Ride for me.
Sober thing. I gotta do it.
It's so great. I like to laugh because the 10 years made it. The 10-year Manjaro, ChatGPT, and they wrecked us. There's nothing left.
Like,
There's nothing. We're done.
Cancel that money.
Yeah, if you continue experiencing issues with them, then uh you may wanna look to get a different broker, because that's unacceptable. Like the one thing you want to be with the your firm is your tools, right? So the broker that you're using, that's your tool. So you do not want to be going to a job to do something and not having the appropriate tools that you'll need to execute and complete whatever set job you're looking to do. um I've never been a fan of E-Trade, to be honest. um my first broker was Scott Trade. Scott Trade was bought out by TD, but I had already shifted over to TD before Scott Trade was bought out. Yeah. But I mean, I do know that E-Trade is pretty good with shorting stocks under $5, which TD Ameritrade is not. So there's that factor. And again, depending on what you want to do, what you want to trade, there's going to be pros and cons to every broker you go to, right? It's usually like really high net brokerages that you get all the bells and whistles of whatever it is that you want. Ooh, come on, Dow Jones is looking good. Come on. I would love to see a red to green move. I would love to see a red to green move. This was a beautiful entry. Go, baby. Let's go. I don't play with me. Play with your mama. Come on, CL. Are you kidding me?
This is it's
Not run by the Justice Department at that time.
oh, you think you're right, the Justice Department was totally independent under Trump. I forgot. David, thank you.
Well,
Thank you, because I forgot.
We're gonna keep trying here.
But here, what are they doing? They want to. They basically say that there wasn't enough choice. I guess
Everything so far is red on the day. Tesla, Nvidia, Apple, Meta, Microsoft. Do I have Netflix on here? No, I don't. X.
so. The case has been overrun by events. Is what I'm saying. That's what I think could even happen to Jonathan Cater's case when it comes to advertising. Because there's so many.
Read that case, you believe they have a strong one.
I think they have a strong one, but the events also have started to override that. Whether it be the trade desk or
Let's
there's so many other
go.
ways to be able to advertise.
Okay. We're in profits on NQ, ladies and gentlemen. We are in profits.
Advertise on Instacart.
Right. So the cases seem to be previous generation. But I remember the Justice Department under Trump at the higher level was so independent that I stand corrected. Right.
Come on,
Where'd they come
bro.
out with Jan 6? They're okay. The Justice Department.
Order filled.
Right. The Trump Justice Department.
Why are you doing this? Why are you doing this?
Oh, okay.
Why?
Because it was done in the form of a question, just like Jeopardy.
It's going to be a heck of a year ahead of us. I mean,
I'm just saying, I look at that case and I just think, are you kidding me?
Yo, buddy, what's up, bruh? What's up, bruh? In and out, that's what I'm talking about. Get it.
the Justice Department or the FTC would say it's not necessarily protecting consumers from these companies as much as it is stifling innovation.
Nah, it's like, yo, from sitting down too much, bro. Like, when I sit down too much, I have to like get up and stretch a little bit. So yeah. Little bit of yoga, man. I was like, you know how it is, man, sitting at a desk all day long, man. You gotta, make sure you get up, make sure the hips are good, cause sitting for too long, man, bothers the lower back. We fancy over here, man. We fancy here with the stand-up desk. Click of a button, Hands free. Ooh, be fancy with it. That's tough. Yeah. Oh. You mean fancy desk? Yup. Fancy desk out here. Mm-mm. Especially when you spend like a majority of the time during the day on your desk, whether it be trading, analyzing, or other stuff I do from my desk. Like this was a very good investment, especially because there's days where like I'll literally trade all day long, but that's usually when we have like a lot of volatility and volume. Um, that I tend to be here literally all day. Ooh, come on.
Big increases. It's true that the union hasn't had big raises in a long time, but I thought that President Biden would have failed. Here's what I thought Biden would do: come in and say, "Listen, let's get this thing worked out. Have the unions get their way for some of this, but let's get people moving. Let's get people working again." That would have been like what I thought the president was going to do, but no, the president's on a pivot.
I can grab me one right now.
What we used to do.
Oh yeah. Bro, and mine, it's a glass top. On the side of it, I have USB. I have one, two, three. I have three USB ports where I can, plug USB cables to either charge my phone, charge my laptop. So instead of actually having it like connected to the outlet, I can connect three USB ports to the desk, and when the desk is on, it'll charge the devices for me. But it's a nice glass top. I have comes in with like a drawer. I have a drawer that pulls out because most of them that you see, they're just flat and they just go up and down. There's no real like area for like storage. So like this, I have like a full on drawer, and the top is glass. Touch.
Chinese EVs to be so cheap.
Yeah, we can't let that happen. No, that wouldn't be good for the American consumer.
No, or for the Princess Bride.
See, that's the thing. It goes both ways, right? Why not let everybody, to your point, why not let
Do 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 do.
EV,
Do do.
powered automobile, so what if it's made in China? I mean, what is that the argument?
We've done very much to be able to have a
The price of TVs came down so much.
You wouldn't buy Chinese.
There you go, man. My desk is fast, but I feel like I gotta do 30 minutes of your
Chinese steel.
Oh yeah, I do that. Once I jump off, I do some stretching, some meditating, and then I go to the gym. And then at the gym, I do the massage chair.
What's interesting is when we have senior
Copy
managers,
that.
let's talk about the two different countries. When the CEO screws up in our country, what happens? Are they detained by the Justice Department?
Come on, come on, ES, come on.
CEOs are making too much money to be put in jail.
She be detained. I don't know what happens when you get detained. Is that good? You know what I'm gonna give you?
Yo, are you still in Florida? Are you still in Florida, bro?
Okay, give me a chance.
You gotta still be in Florida. I think you're still in Florida. Look like you was celebrating a hell of a birthday. Was it your birthday? It was your birthday. Yes, it was. Happy belated birthday, bruh.
You can't have a serious.
Tracking stock, they own most of Sirius, remember? In fact, they hold 3.2 million shares of Sirius. They have 327 million of the total outstanding shares of the tracker. So that works out to 9.8 Siri per LSXM. There it is. The A, look at the K as well, if we can. They're using a 1.05 ratio here. A 1.05 overall gets you to 10.3 ratio. That's what we're talking about. If you're a Siri holder, what are you getting is what you're asking me here, and I'm trying to explain it.
The manipulation, they're not quite ready to let it do its thing. No, sir, just there for the weekend. It was my buddy's
That's not as
21st.
much
So
as if you're a holder of the tracker, right? It's coming together.
okay. So wait, so you're not 21?
This period of time, the idea is to try to solve it by creating just one company, one stock. And that's where they are. It's got to be approved. I think special committee's going to have to approve the board. Independent directors will be a part of that. But again, series coming down in part because of where the offer
Come on.
is and the
Come on, I need you over.
that you see right there.
I need you over 360, baby.
Both moving up.
19, but the club doesn't ask question if you buy VIP. Okay. I see you. I see you.
Gets you the
What?
55 cents as well. That's the cash payment that I mentioned. And if you are
Dude.
LSXM,
What? Give me a second, guys.
Sirius is quite Sirius, the overall thing is here, these two things, the trackers never tracked successfully the underlying, and they're trying to resolve that.
Well, Sirius was always a play on used car sales.
Yeah, this has nothing to do with the underlying fundamentals of Sirius. This is simply financial transactions.
It just seems very inexpensive.
Yes, but it has weird moves. Remember, it got added to this index, and then this index, first you couldn't lend shares, it could get shorted. That had brought a short squeeze. It sent the shares up even more. So it's sometimes deviated from the underlying fundamentals. It's good. Yeah, but again, let's see if it gets approved.
Dang, to be 19 and trading, I know, right? Man, you are so ahead of the curve. With that, to be 19 trading the markets, bro, be a millionaire by 21. He scratched me. But there's news. Come on. So NQ is still holding over 14,803, 14,800. What we got? Almost 10 o'clock. I'm glad I started. That's a good thing that it threw your perception of the 9 to 5 out the window, bro. It's like, why bust your butt behind to go somewhere to deal with people that you probably are not necessarily gonna like, to grow someone else's business when you can put that same effort into yourself, and when you can be in an area or an industry where you're making someone's monthly salary in a day or yearly salary in a week. You know what I mean? Wait, what do you mean you put people to sleep for a living? Um, that means like what, anesthesia, like anesthesia and stuff like that? Oof. Okay. Okay. ES is now below 344, and woo, look at this slide. New low.
Order filled.
Okay. Just added. What a slip and slide.
Make sure you join us for the Delivering Alpha Investor Summit on Thursday, the 28th in New York City, where we will convene investors and industry leaders to provide some insights, some ideas, some analysis to help you balance risk with maximized returns. You can scan this QR code or you can just visit cnbcevents.com/delivering alpha.
Can't buy a rental car, but can make you can't rent a car, yeah, but you can definitely make that. Yep. I mean, it gets the point, like when you really have like certain there's certain levels to it, but yeah, legally you can't rent a car. That's a bummer, bro. Mm-mm-mm. Goodness gracious. Okay, NASA's taking out the lows. Let's see what ES will do.
Order filled.
Mm-mm-mm. Such a blessing we found trading young when we have no responsibilities and facts. That is a gift. If more people, if they actually promoted this more, man, the amount of freedom people would have, ridiculous. Jeez. Mm.
With continued pressure.
London lows has been taken out.
Searching for positive research, there's a bear note, fresh pick Rivian, where they're talking about demand remaining strong, margins improving, building a brand through roughly showroom presence, and they're using it for young price targets.
Yep,
This is just
I sure am.
note. So if you're looking for an EV, a lot of viewers like EV.
It also gives
it's
a
doing well.
pathway to
Let's put
other
Rivian.
things with business and investments. Correct. Correct.
Today was the underperformance of Apple, one of the worst down names, even despite some of these lead times, at least for the basic iPhone 15.
Long knives are out for Apple. I don't get it. When I look at what I see good demand, but it is a large cap stock, and the large cap stocks are fully prey to the 10-year. I think it's just another casualty of the 10-year for them. I don't see anything else other than this watch band that people think that's coffee stains or some silly.
How about tonight?
Okay, so I have Carrier, which is doing quite well, particularly because of a lot of stimulus money. And I have Confluent, which is one of these companies that does incredibly well if you want to use AI. So I'm trying to play to the strengths of the market because I am a dollar sign represented by man, but it's I'm sorely trusted.
Sorely what? Sorely tested, yes. I'm tested, yes.
Damn.
Viewers could tell.
And of course, we'll have Costco to kick around tonight. If we're looking at consumer, maybe getting share of.
See, y'all gonna pull back. Might come. See y'all catching the bid. Look at right to the pullback area that I was going over yesterday, which was 88.10. I was expecting it to go under 88.10. It came 9 points away, 9 cents away from that. Damn, and a nice reversal. Okay, now let's keep an eye on NQ. I'm gonna wait. We're still all this action, and it's still not even 10 o'clock yet. Just gotta be patient. Wait. I'm gonna let this 15-minute candle close. I was stopped out of my NQ long. I'm looking to relong if the candle can close above this prior daily low. And my average on ES is now 43, 45, 75. I'm in 2 contracts long on ES with an average cost of 43, 45, 75. Jeez, Nas. NQ, no legs. We closing in on that first payout. Yeah, buddy, get it. Target if I didn't. It's all right. Losses happen. We're not going to be perfect. I don't know if it's me, but on some of the devices, my like Dow Jones is not really moving. Something's up. I'm setting a buy limit on NASDAQ 14,769. Just a micro, because I don't think it's quite ready yet. Bro, the way this thing is jumping.
David Faber, we're live for you from Coast 9, as always, at the New York Stock Exchange. Take a look at stocks, sell-off mode early this morning, ahead of a batch of data in just a few moments. The S&P down 0.8%, so given back yesterday's gains, the Nasdaq's down 1%, keeping our eye on Treasury yields.
They sweep the lows. Look at this.
Well, 30 minutes here into the trading session, here are 3 big movers we're watching. Starting with Domino's Pizza, Oppenheimer raises its price target to $450, names it a top pick, saying Domino's is, quote, an underappreciated revival story in 2024. Plus, Baird reiterating its outperform rating on Tesla, saying it believes Tesla is best positioned among its peers and recommends it as a top pick for the rest of the year. Not helping out much today. DraftKings gets a boost after JP Morgan upgrades that stock to overweight from neutral, raising its price target to 11. sorry, raising to $11 to $37 by $11. Stock is up around 150% already year to date.
Getting some breaking news out of Washington, D.C. We'll get to Eamon Javers on that. Hi, Eamon.
Carl, J.P. Morgan says it has reached an agreement in principle to settle the Jeffrey Epstein sex predator litigation with the U.S. Virgin Islands with a payout of $75 million. The settlement ends a bruising episode in which each side accused the other of enabling Jeffrey Epstein's abuses and led to a series of embarrassing disclosures of relationships that high-ranking bank officials at the time had with Epstein himself, including one former executive who frequented Epstein's private island. Now, the Wall Street firm says the payments will be divided into three categories. $30 million will go to USVI charities focusing on social ills, including fighting human trafficking and sex crimes. $25 million will go to the USVI to enhance the infrastructure and capabilities of law enforcement there. And $20 million will go toward legal fees in all of this. In a statement,
No,
JP Morgan
right
says
now I'm
that the
actually
settlement does not include an admission of
right now I'm actually negative on ES. My entry on ES is 43, 45, 75, so I'm negative 5 points on that. And I'm currently down on NQ. I took a 30 point loss on NQ, a 35 point loss on NQ. So I've just recently scaled in on that with the micros just to wait and see. Once it gives me confirmation, then I'll add the mini and look to ride this baby back up.
Very much. That's our Eamon Javers this morning. Meantime, we're getting some econ data across the tape. Some confidence.
And I'm still holding ZL from yesterday, so my position on ZL is 58.75. So right now I'm down like a point and a 0.30 on it.
Some revisions, some good revisions though for last month are going to help. 106.1 moves up to 108.
But that's a swing trade right there, so.
Situation, 147.8. July, but keep in mind, July wasn't that long ago. We just had a lower read in between. Last month's lower read, 144.8, moves up a bit to 146.7. Finally, what lies ahead? Maybe the most important of all, 73.7.
Word, yeah, I saw his podcast. He's actually part owner of another prop firm with a friend of mine in New York. Well,
That was upgraded to 739,000, which still keeps it at the best since February of last year. And before we go to Diane real quickly, Richmond Fed Manufacturing breaks a record of 16 negative months in a row with a positive 5 business conditions. Turns back negative at -5, which means 17,
Yep.
18,
Yep.
19.
Him, Omar, and Palatine.
And for that very close but still disappointing new home sales number, Diana's going to give us a little bit more detail. Diana?
Well, Rick, it's all about mortgage rates. Look, these are signed contracts. That's how new home sales are counted. Signed contracts in August, and in August, the 30-year fix went well over 7% and stayed there, and that's what's hitting new home sales down 8.7% month to month, still up nearly 6% year over year. I'll note that the median price was $430,000. That is down 2% year over year.
Lows on ES have been taken
out.
out.
Offset these higher mortgage rates. They're also buying down the mortgage rates as an incentive. We've heard that from the home builders, starting to do that again. They had stopped doing that in the spring. Also, homes to a 7.8-month supply. That's up from 7.3-month supply in July, and that just means that the builders have more to sell, which is better because obviously there's nothing for sale on the existing home market. I would note one number I love to look at, which is the homes that have been sold but have not been started. That have been pulling back, but it's actually rising now again. The builders are up against all kinds of issues with labor and material delays and costs, and they're saying that it's harder for them to build more homes. So they still have high supply, but when you see that number start to go up, you have to say, okay, they're selling a lot, but they're not able to build them. So again,
Look at that. There you go. There you go, you dirty little. Yep, it's still holding well. I mean, this retracement, they took out the yesterday's low, and watch this instant reversal already. Look at that. And this is just something that they tend to do. Nice quick flip. Oof.
Starting to bite. And the fact is that treasury yields are still rising. We're at the 16-year high on yields. Maybe a little bit of relief today, but the long end is what everyone's paying attention to, the 10 and the 30-year, where we have seen this move up despite, some mixed signals on the economy. I think we have to start with Jamie Dimon speaking to our colleagues in India, JP Morgan's chief.
Yep.
Saying that he's still cautious about the outlook. Listen.
Run stops and then flip.
Right now, it's good. The fiscal stimulation was extraordinary. The monetary stimulus was extraordinary. That was a global phenomenon, more in the United States and elsewhere. But it's a little bit of a sugar high. And that's a little bit going to go away. We have to sell candy, but all these other things are there. QT, Ukraine, oil, gas this winter, disruption of trade flows. So, I think good leadership on the part of, America, India, China, Europe could make sure the negatives don't happen. But I put myself in quite cautious category.
Sounds like, guys, he's cautious on even the soft landing story, which is the consensus right now in the market, which is not inconsistent from Jamie, but it's always good to get an updated view.
I definitely could have played this better this morning. Come on.
Consistently cautious, and that has been reflected to a certain extent in the risk that JP Morgan's been willing to take. Remember, we had the mini bank crisis. Nobody was talking about JP Morgan's assets being incredibly dated, for example. They were not. He also talks about geopolitics. He mentioned this with the Mother Stone as being a significant risk, brings it up a great deal. But yeah, to your area, it's macroeconomic inflection point that we may be at in terms of the 10-year. I don't know. That's what people seem to.
Well, he thinks rates are going up to 7%, which, look, ever since Powell came out last week, it's been a steady march higher on yields. And the Powell message was maybe still one more hike this year because we got that in the dots in the forecast, and take out the cuts in the beginning of the year and expect fewer of them. And it feels like the market
Where the buyers at?
heeded that call. As far as the economy, though, it's interesting that rates are marching higher even among some weakening signals. For instance, what Jamie was talking about, the sugar high fading, is everyone's talking about this new Fed data on household savings. It's come down, especially for the low income. Remember, all the CEOs we talk to and consumers say the low income is feeling the pressure. Well, we've got this great chart, and Pantheon, I thought, made it really clear to tell, which is the bottom percent of the income scale, 0 to 20, 20 to 40. Look, there's the household savings. There's the assets, right? All the way down back to pre-pandemic levels. The top line is the top.
That's the top 20%.
Gotta go. All right, buddy. Thank you for joining. See you mañana.
They did when the pandemic began. We've been waiting for this moment. This is not a surprise.
Right, it just makes you wonder if consumer spending as a whole for the U.S. economy is going to hold up, given that headwind, given the fact that rates are higher. Diana just reported on where mortgage rates are going. We talked a lot about credit card rates and personal loan rates, and they're all moving higher, and the market is tightening off the back of this Fed meeting in other ways. Now, one interesting thing might be to talk about is the deficit and the fact that we're heading into a shutdown and whether that's starting to have an impact, because interestingly, this move up in rates, Carl, is not happening with a huge adjustment.
A whole bunch of stuff, and watch this shift on a dime. Oh, we're no longer going to a shutdown every year.
Due to that, which does make you wonder if there are these concerns about supply and about the fiscal outlook.
Dollar's a great example. I mean, the dollar's got a few things going on. The growth differential between us and other economies. Obviously, risk-off behavior has something to do with it. But 106.2 overnight. Remember when we were in the 114 range? Those were not great days.
No, and it's going to be a headwind for earnings. It's going to be a headwind for the economy. Dollar, I think, following yields, and also the fact that the U.S. is still looking better than the rest of the world. But on this fiscal question, there's a question mark about what the dollar would do if there were real worries about fiscal. I think Moody's, just the warning that a government shutdown, while it won't delay interest payments, it won't necessarily, affect things fundamentally, but it would be negative for the U.S. debt rating because it would highlight the political issues that we deal with relative to other AAA rated nations.
Well, the dysfunction that has been cited previously in either downgrades or warnings from the rating agencies as well.
Right.
Remember when S&P downgraded us was during that time as well.
2011,
Yes.
and then Fitch downgraded us again, and this is not like the debt ceiling because we're not going to default. sustainable fiscal burden. What are we running a deficit percent of GDP? 6.5%?
Yes, but
Those are
Janet
recession
Yellen, in
numbers.
response to you, Sarah, said that's not what she looks at. She looks at interest as a percent of GDP, correct?
Correct.
That is still about 3%.
It's lower, but it's still a problem, and I think
You
Wall Street.
disagree with Janet Yellen?
I'm not going to disagree with Janet Yellen, but I will say that a lot of investors I talk to are paying attention to the 6.5% federal deficit.
Also, the denominators can change in a hurry.
These are recession-type numbers, and a lot of it is net interest expense, right? There's the federal government paying more because of higher interest rates, but it's a headwind because it could put upward pressure on yields. It makes it harder to stimulate if we do go into recession. There are geopolitical consequences of it. So people are talking
And
about
what
this.
about shrinking the balance sheet? Are we underestimating the impact of that's happening?
Jamie Dimon continues to sort of highlight this as a risk. It hasn't been front and center just because interest rates have been the primary tool for the Fed and what the market has reacted to. But as I've been saying, when the Fed stops raising interest rates, there's still going to be tightening going on because of the shrinking of the balance sheet, and that'll be the test of whether that's going to be a headwind for stocks and the economy. It's still a massive balance sheet, people are saying. So it's all the whole question of stock and flow. It's headed lower, and that's an important signal. But we're still keeping high levels.
I know right now this is not a lot of excitement actions for y'all.
Start at 9, right?
Yeah.
8s.
Watching paint dry, I think that's all you need to.
Literally just waiting.
They want, but and I am saying it's a headwind for stocks, and that's where Mike Santoglio was arguing.
By the way, we just lost 4,300 for the first time since June.
All right, let's get to some other news this morning as well. As well as President Biden, he is making his way to Michigan today. He will join auto workers there who are on the picket line. Phil LeBeau, of course, has been live on those picket lines for over a week now. That's the latest. Phil.
And David, I think we're going to be on these picket lines for some time to come. We'll talk about the president's trip in just a little bit. To bring you up to speed in terms of where things are in the negotiations between the UAW and the big three automakers, specifically with regards to Ford. Ford announcing late yesterday that it would be pausing work on a $3.5 billion EV battery plant that is scheduled to be built west of here. This is a plant that would employ 2,500 workers, scheduled to fire up in 2026.
Order
Ford now
filled.
saying that it's reassessing whether it can competitively run that plant. Competitively is the word that catches a lot of attention because shortly after Ford made that announcement, the UAW issued a statement blasting Ford's decision not to continue work at the battery plant, saying we are simply asking for a just transition to electric vehicles. And Ford is instead doubling down on their race to the bottom. That's Sean Fay, president of UAW.
Just added to my ES long.
And also, when you take a look at some of the stocks to keep in mind, in addition to Ford, GM, there's Stellantis yesterday.
I'm gonna risk yesterday's profits, so I have another 10 points that I can risk on ES before completely stopping out.
Makers here in the U.S. and certainly higher than Tesla. Now, with regard to the president's trip here, he is expected here in the Detroit area, basically Wayne County, and that's where he is expected shortly after noon. What's unclear is exactly where he is going to go when he comes here. White House has said
At this point, we're probably not going to see the reversal until after the London close.
and he will voice support for those who are picketing. Whether or not he actually walks a picket line or simply meets with workers, that remains to be seen, guys. This is being tightly controlled by the White House. They're not even saying exactly where he is going here, but not hard to see all the cameras that are around here. There are plenty around, and obviously there's the pool camera with the president as well. We'll hear from him at some point early afternoon.
You know, really interesting, Phil. I mean, the fact that he's there is such a strong statement. I wonder if you know anything about the president and the administration's, I guess, strategy here, because at what point, I know he fights for the workers, he puts unions above all, but at what point is too much that we don't want to bankrupt or at least hurt our American automakers, fuel and supply side inflation, hurt the overall economy, which is the flip side of the strike.
Yes, indeed.
Sarah, I think they're going for populist politics here. If you want my honest opinion here.
Indeed it is.
For the UAW and the strikers here, obviously in Michigan, a lot of people feel like they should be making much have said you are for organized labor, you are for the working man. This is a chance to solidify that. And remember, Donald Trump will be here tomorrow night. And while the UAW president, Sean Payne, has not had kind words about Donald Trump, he also has not endorsed President Biden. So it's unclear who really gets an advantage out of coming here to the Detroit area. I will tell you this, guys. I hear this from people all the time. They say, well, are the rank and file, are they all behind President Biden? Are they true Democrats? No, I've heard from a number of members who believe in Donald Trump. So this is not a clear-cut Democratic stronghold and the president's coming here and he's going to be cheered on. There's a likelihood there's more than a few people, wherever he goes, who are Donald Trump supporters. And who knows, maybe they'll tell him.
Yeah, and of course, Michigan itself, Phil, is still considered a so-called swing state, sort of when it comes to the national election. Let me go to the LeBeau meter. It's been accurate so far in terms of been on the negative side. Even last week, late in the week, where it appeared that we had perhaps some real progress being made between Ford and the UAW. How do you view that? Are we back to square one there, or is there real?
I don't think we're back to square one, but I do think that this battery plant, that is a huge stumbling block. They're going to have to figure this out. If the UAW, look, both sides are being coy about exactly where they are on this, but if the UAW is pushing for that battery plant to be under the Ford master contract, I'm sure Ford is saying, oh no, we don't want it under the master contract. A number of our other our joint ventures with a Korean battery company, and therefore we don't need this one to be under that. So that's the rub here, guys. I mean, we all know that these battery plants will employ fewer people ultimately for electric vehicles. But whether or not those employees go under the master contract, I'm sure that's at the heart of it. Bottom line is this, David. I'm not terribly optimistic we get a resolution anytime soon.
Hey, finally, Phil, UBS talks about the plant construction pause, and they say it's possible that it's not just with regard to the strike, but maybe Treasury guidance. There is a House Ways and Means Committee.
I might have to kill this trade. This thing is just no legs.
Reduce dependence on Chinese supply chains.
Right, because remember, they are licensing the technology from CATL out of China. It is a wholly owned subsidiary, but they are licensing the technology from CATL. Which raises the question about this relationship. That's what Washington is probing and asking those questions with regards to this battery.
Bill, thank you. We will
Gold catching a bid.
In the meantime, Bill LeBeau, appreciate it with the latest on the UAW strike. As we head to break, here's our roadmap.
Let's see if it holds.
A closer look at the health of housing following today's data. Real estate sector more than 10% off its 52-week high. 3 stats you need to be watching in this market from here.
Plus, Apple's Eddie Q will be taking the stand in the Google antitrust trial. Here to give you the latest on that.
And tech is on pace
Yep.
for another day of losses.
You already know.
Sectors for the quarter as the Dow's now down 300. Lowest level for the S&P here since June. Don't go away.
There we go. That catching a bid. Okay. So far, so good.
Got that housing data a few moments ago. New home sales coming in below estimates. Since March, with the real estate sector more than 10% off the 52-week highs. Housing Wire analyst Logan Shavi joins us this morning to react to the data. Logan, I mean, not pretty. Is this mean incentives can be ramped up even further than they already are?
The builders will do what they can because, unlike the existing home sales market, monthly supply spiked for them, and they sell homes like selling a commodity.
Very nice.
They will do what's needed, but there's limits on how much they could pay down rates. I think people forget that their profit margins are much higher than previous decades, so they have some wiggle room to still allow this to continue. But again, higher rates are never a good thing for the housing market, and the 10-year yield is keep on rising. That's going to play its hand over the next few months.
Right. Are you modeling in any relief on rates at this point?
If jobless claims start to tick up higher, that's kind of what I'm looking at. But headline jobless claims almost under 200,000 again. So the Fed, I believe, is frustrated that they haven't been able to create more labor supply, even though they might talk like they're happy with the recent data. But the one thing that can do it, construction employment might be easier for them to target than the service workers.
Well, they're trying to target prices, right, which have remained elevated. I thought it was a surprise what we got from Kay Schiller this morning on home prices. Now it's got to July, but an upside surprise is not what we want to see.
Well, rent inflation is so much for CPI index, so I think they're happy with rent inflation, the growth rate slowing down. But again, home prices are a function of supply more than demand right now.
Oh, if it can reclaim yesterday's lower high.
That's the only reason consumer index prices are back to all-time highs. And there's not much the Federal Reserve can do about this since majority of America is still again.
So what do we do about the inventory problem? Is that going to self-correct?
Unfortunately, right now, probably the only thing that can create supply faster is a job loss recession. I think in the back of the Fed's mind, if that occurs, maybe they could alleviate some of the price pressure. But remember, the growth rate of home prices are very slow now, so I don't think it's to their interest to publicly say that. But inventory year over year is negative. New listings data is negative year over year. The price cut percentages that we had last year, currently this year, we're 4% below that. So this is a supply story. We're dealing with better home buyer profile right now with home sales near 4 million. Not much they can do to move that unless they create a job loss recession, which will create forced equity sellers this time around. The whole foreclosure story is 9 to 18 months away from the first few months that we lose jobs. So that's not going to help them anytime soon.
But the discount in prices, or I should say the closing of that discount being less than last year, that's just a function of not enough homes being sold.
Not enough homes and stable demand. I think last year we had the biggest one-year home sale crash ever. Now we're just kind of hovering around 4 million. So it's a much different marketplace. But again, we keep it simple. Active inventory is near all-time lows, and new listings data has been trending at all-time lows for over 13 months now. So on the positive side, homeowners are doing really good.
This is going to be an all-day trade.
That said, we've had
Well, while we wait, if anyone has any questions, feel free to ask.
Well, supply getting worse to me is supply going lower. Supply getting better, to me is the
Okay, come on, Naz.
So bent on making sure that this is in 2008 that they kind of forget that a lot of the forced bidding that we saw, in 2020, 2021, and the early part of 2022 didn't really help them much because home prices accelerated. So I'm a very pro-supply guy, but I understand that if you list your homes, majority of the time you're qualified to buy a home. And right now with affordability at all-time lows, a lot of people just can't list because they can't afford it. This is a very difficult problem to solve in the current situation. And to me, a job loss recession creates forced equity sellers. Outside of that, we're just dealing with the tug of war in the housing market between sellers and buyers. Right. One last thing, our Diana Olick asked a good question about adjustable rate demand. I just wonder if you're seeing that, or if not, maybe that's a signal that consumers don't believe there will be meaningful relief in the years ahead.
Adjustable rates loans are not like what they used to be. So the demand you might see is a small increase on a year-over-year basis. But that story ended after 2010. We're never going to see any growth in adjustable loans. The qualification processes are much different. And it's not the loans that we saw from 1996 to 2005. So to me, it's just a traditional 30-year fix. We're working off the 10-year yield. That's the main story for housing for the rest of the year.
Hot stove has been touched before. Logan, thanks. Appreciate the help today. See you soon.
Speaking of housing, next time we're going to continue the conversation with the CEO of real estate firm Redfin. That's coming up at 11 a.m. And as we had to break, watch shares of Fisker today. The EV maker planning to ramp up deliveries of its Ocean model to 300 per day. Bank of America also reinstating coverage of the stock with a buy, saying it has a lower risk business model than its peers. Shares are rallying 14.5%. Above $6. Keep in mind, this was a $30 stock back in 2021. We'll be right back.
Okay, okay. Go on with your bad self. All right, we're looking good. We're looking good. Oh, beautiful. Can we keep this up? Alrighty. Oh, full reversal, please and thank you. This 15-minute candle to close to add a mini. Let's go. Full speed ahead. Full speed ahead. I'm rescaling back into the Dow Jones long. Okay, looking like okay. All right.
Welcome back to Squawk on the Street. Take a look at stocks. We're pulling back today, more than a percent now on the S&P 500. Nasdaq's getting hit a little more than that as well. So we're negative on the week. And if you look at the breakdown by sector there in the S&P, everybody's weaker right now. The hardest hit, communication services, consumer discretionary, and technology. Also, utilities are getting slammed today. A more than 1% decline in real estate. Financials are getting hit. What's holding up the best? Healthcare and energy.
Well, speaking of healthcare, it's certainly going to be one sector we'll keep a close eye on when the fourth quarter begins, just a few days from now. It is underperforming, by the way, the S&P this year by the widest margin since 1999. Our Angelica Peoples has more for us on that. Angelica.
Yeah, David, healthcare stocks are really taking a beating this year. The S&P healthcare sector is down 4% this year, which is on pace for its worst year since 2016. Meanwhile, the broader S&P 500 is up 13%. That's the widest margin since 1999. And it's surprising because healthcare is normally seen as a pretty safe bet during times of economic uncertainty because people need healthcare no matter what's going on in the broader economy. But pharmaceutical companies are under pressure from Washington. There's a new drug price law, and also the looming election season isn't helping because politicians love to beat up on pharmaceutical companies. Meanwhile, smaller biotech companies are spending less because their stocks are under so much pressure. And that's bad news for service providers like Danaher and Illumina. But it's not all bad. Companies that are developing obesity drugs are seeing a big gain this year. Take Eli Lilly. The company's stock is up about 50% this year, ahead of the expected approval of its obesity drug. Carl?
It's just a sea change in the business, and market's obviously trying to get its arms around it, kind of like with AI. Angelica, it's great to have you on the beat. Thank you. Angelica Peoples this morning.
Thanks, Carl.
Still to come, a second Apple executive set to testify in the Google antitrust trial. We've got the latest on that when we return in a moment.
30 minutes left of streaming, ladies and gentlemen. I will be holding these positions till the end of the day or late afternoon. Again, my average on ES is 43.45. $43.45.75. Once we get a nice, maybe potential higher low, slightly maybe after 12 or 1, but this green candle gives me a little confidence that okay, we are going to see somewhat of a decent retracement. Possibly we could go head back and retest 14.825 or maybe 14.850 area, which would still allow me to recoup my loss on NQ for today. But let's see. Get him, boy.
Christina Partsinevelos with your CNBC News update at this hour. The Supreme Court rejected Alabama's latest attempt to approve a redrawn congressional map that includes only one majority black district. The High Court refused two emergency requests from state officials to block lower court rulings that invalidated the new map. The Supreme Court sent the state back to the drawing board in June when it struck down Alabama's original congressional map because it discriminated against Black voters. The U.S. is focusing in on clean energy. The Biden administration is hoping to create a commercial nuclear fusion plant within 10 years, according to Energy Secretary Jennifer Granholm. She says the facility would produce the carbon-free energy source to power homes and businesses. And California's governor signed a bill that would ban school boards from rejecting library books or textbooks that cover race or LGBTQ plus topics. Any school that defies the new law could face state fines. The measure took effect immediately after the governor signed it yesterday. Sarah, back to you.
Tina, thank you. Mega cap tech under pressure this hour as the Nasdaq drops more than 1%. Today, Apple's Eddie Q is testifying in the DOJ's antitrust trial against Google over its search dominance. Our Steve Kovac joins us with more. What do we expect to hear from Apple, Steve?
Yeah, Sarah. Well, Apple's Eddie Q took the stand just minutes ago to testify in the government's antitrust case against Google. So you may be wondering, why is Eddie Q at a Google trial? Well, he's in charge of services at Apple. That includes the App Store, Apple TV Plus, Apple Music, and the billions a year Apple collects from Google to keep Google search the default on iPhones and other Apple gadgets. And that's the key to the government's case against Google, alleging Google uses its deep pockets to pay companies like Apple, Samsung, and more to be the default search engine, squeezing out smaller competitors. I'm told by sources familiar with Q's expected testimony, he plans to defend the arrangement with Google, saying, for example, he believes Google is the best search engine and that users still have the option to switch their default to something else. He'll also say Apple doesn't make its own search engine because Google's is already there and, again, considered the best, and Apple doesn't feel the need to allocate resources to building a search engine. Now, for some perspective on why Key would defend the arrangement in federal court, those Google payments go towards Apple's important services revenue segment. And according to analysts at Bernstein just last week, Google will pay Apple about $19 billion this fiscal year, or about a quarter of all expected services revenue.
That's some
Now,
serious
so far,
money
according
right
to
there.
CNBC.com's Lauren Feiner, who's in the court right now, Q testifying about the search agreement with Google and how he was the lead negotiator for Apple and hammered out the deal with CEO Sundar Pichai, and explaining how Apple shares ad revenue with Google based on searches that happen on Apple devices. Now, this is just part of the testimony, and we're expecting some of it to
The
be
leverage is in the
closed, but right
Q&A
now, this is what we
section. Depends. If you're trading the indices, I think it's 1 to 30. If you're gonna trade forex pairs, I believe it's 1 to 50.
Given he is being used here in Apple in Google's defense.
Yeah, exactly. And he basically has to defend the decision not to go in-house with
You're
the
welcome.
search engine. We've seen Apple do this before. There used to be Google Maps built into the iPhone, David, until Apple decided to do it itself instead of paying Google for the licensing on that. The money's coming the other end, though, and it's really interesting that up to a quarter of the services revenue, that's Eddie Q's business, a quarter of his business is at threat if Google loses this case.
We're kind of back to the game that the Street was playing earlier in the summer, Steve, when Microsoft ChatGPT ChatGPT really hit the street, and people wondered whether or not there could be a shift in that deal.
Yeah, and that's a little different though than what we're seeing here. I mean, there were some rumblings. I remember that
I don't look like I'm getting
ChatGPT is
that.
going to superpower Bing. These search deals are going to get blown up. There was a headline that Samsung was reconsidering its deal with Google. That never happened. And in fact, despite what Microsoft said about Bing, that they could gain market share because of ChatGPT built into Bing, that has not happened. In fact, in some months, Bing actually lost a little bit of market share. So it's less of a factor in here now.
All right, guys, 20 minutes before I jump off. I might jump off a little earlier. Right now, it just seems like it's literally just a waiting game to get the bounce in for things to hit. So, looking good so far. I mean, Nasdaq is looking really good. If we can get a nice close above, or at least a strong close above 14,787 or 14,800, we can definitely see maybe a possible retest of this level of 14,889. This has been definitely patience, playing in. So if you were patient and stuck around to possibly catch this bounce, good job.
Recession this year, and that would lead to a pivot in rates all before December 31, 2023. Now we might be able to skirt through in 2024 without a recession at all. And of course, we will have a pivot next year, but it'll be more subdued and pushed later in the year. And these tech stocks and other aggressive growth stocks really crave low and falling rates. And of course, that thesis has been pushed out quite a bit. So you've had stocks like Nvidia, fundamentals sterling, but up a triple for the first half of this year. Of course, they're going to continue to consolidate. They might even drop further, but I think the fundamentals of some select names are great, and it's not a fundamental issue. It's just take a look at the price chart and see where they settle, and then get ready to buy them.
Well, you mentioned AI. We looked at all of your top picks, but the top five: Nvidia, Alphabet, Microsoft, AMD, Amazon. I mean, they are all right in that sweet spot in terms of investors who want to look for exposure to AI. So how important is that? How much of a growth driver will that be? And why are these your top picks?
So Nvidia, for example, is probably the only mega cap tech name right now that is seeing a benefit, right? Because they're powering the learning of the large language models. What we found in the AI theme over the last couple of months is everybody talked about it early in 2023, but unfortunately for most companies, unless you're training the models, then maybe get into an inference after that, AI is going to be further down the road. But I do think it's going to be a big deal. You lead with AMD and you lead with Nvidia, right? The chips powering those models. And I do think that the other players, the Microsofts, the Amazons, the Googles will be beneficiaries, but with a little bit of a lag.
What about the fundamental question of regulatory
Let's
action
go.
and
Yes,
charges from the government?
ES.
We just heard from Steve Kovac on Apple, Amazon facing a decision. Are you not worried? I saw those are both in your top picks.
Yeah, so Apple is not. I think Apple's just
Go, baby. Go. Yes, we're up above it.
If you're a tech investor like
Oh,
me, you
can we
always have
get
to have
over
a position of
800?
Apple, but you trade around it. But I'm underweight now. Amazon, I do worry, even though the FTC charges will be brought, it'll be a big splash in the headlines.
Talk
That's
about
coming soon. That's what I'm telling you.
patience.
But I probably would hold off on
The only one
Amazon.
I need to act right now is
Through
ZL.
that FTC announcement pipeline. But man, I really like what they did last quarter.
And profits on the Dow Jones just moved stop loss to break even.
US, which is their profit driver. And even with all the cost cutting in the last year, they'll start to see a little bit of resurgence in profitability in their e-commerce business. So very much like Amazon, after we get through the government announcement,
Finally, Paul, you're old enough to remember, of course, the advent of the internet, or at least the excitement around it in the mid to late 90s, certainly reflected in stock prices during that period. How do you put AI, or how do you view it in terms of this revolution, so to speak, versus that one?
Unfortunately, they're eerily similar. I remember back in the days, I used to run the largest tech fund on the planet during the internet era, Merrill's Tech Fund. And when companies just uttered the word .com, even if they were not even tech companies at all, of course, their stocks skyrocketed. We saw a little bit of that earlier than this year. But what happened is we reported the second quarter results, and we'll begin to report third quarter results in a few weeks. You see some companies that will probably give up the ghost a little bit because they talked about AI, but they didn't show Nvidia anything in their financial model just yet. So they are similar, and that's why I was a little bit worried.
Beautiful. Go. Go. Yes. Holla. Keep it going. Keep it going, baby.
Let's get back to our Eamon Jabbers this morning on that JP Morgan settlement payment.
Carl, that's right. We're getting a little bit more new information here. We've got a statement now on JP Morgan's $75 million settlement in the Jeffrey Epstein case from the U.S. Virgin Islands Attorney General Ariel Smith, who says this.
Beautiful. Nice candle close above prior daily low. Still pushing. Let's get it. Let's go. Marvelous. Yep. NQ over 82. Come on, baby.
Virgin Islands say the commitments JP Morgan has agreed to include informing law enforcement when customers are identified as involved in human trafficking, terminating customers' accounts if JP Morgan has credible information it is engaged in trafficking activity, identifying escalating compliance
Body, come on, keep it going. Don't stop here.
or slavery. And they say the settlement here is going to create
Don't stop here.
to provide mental health services for Jeffrey Epstein's survivors. But I want to clarify this because I just spoke to JP Morgan, who says that these commitments that were outlined in the press release from the USVI are previous and ongoing efforts. And these processes are not new, they were ongoing already. So there's already some dispute here about the specific new elements in this settlement today from both sides, and you get a sense that they're talking past each other a little bit as they release these dueling press releases this morning. That's back on you.
I appreciate that. David Jammers in DC this morning. We will take a quick break here with near 1% declines on the NASDAQ, the Russell 1000, and the S&P. Don't go away.
30. Right to 800. Okay. Rejection right here. We got London's about to close. Let's see what happens after the London close. Damn, bro. Oh, yes.
CNBC.
Downtown 250. A reminder, join us for the Delivery Alpha Investor Summit.
Right back down. Okay. All right, ladies and gentlemen, that's gonna be it for me. I'm gonna let these trades run out, and I'll catch you guys back tomorrow. I'll tap in around 2:30 and 3 and just post whether if I'm still in the trades or not. But other than that, those of you guys that are up on the day, walk away, go do something else. Everyone else, I'll catch you guys tomorrow. Peace.